Shopify says that merchants who used its platform racked up more than $11 billion US in sales over the Black Friday, Cyber Monday period, and that was up 24% year on year. Is this a meaningless figure? Should investors draw comfort from it? Let's ask Ken Wong, Managing Director of Software Research at Oppenheimer. Thanks very much for joining us, Ken. The number, is it impressive? Is it a meaningful metric to start off?
Yeah, thanks for having me on. We do think it's a meaningful metric. Growth is sitting at 24%. That's a great setup into Q4. Keep in mind, management guided the fourth quarter revenue growth to be in that mid to high 20% figure range. So setting the bar at 24% does get us to that lower end of the target. And keep in mind, we saw an acceleration from the results after Black Friday. So after Friday, we're seeing 22% growth, accelerated to 24% on a tougher second half comp. So it does seem to point to some momentum building as we head towards Christmas. I think more importantly, it significantly lapped the growth rate of other commerce platforms that were growing in that 7 to 10% range. So again, reinforcing that Shopify is taking share, capturing customer eyeballs, and growing consumer sentiment on the platform
from competitors.
Correct.
What is one thing we've heard about Shopify is it's signing up big customers such as Reebok and Overstock. It's a more elaborate process doing that. You incur costs, but is it working?
It is definitively working. Keep in mind, this is a fairly new product for them. Prior to 18 months ago, Shopify really wasn't in the enterprise ecosystem, mainly focused on small, mid-sized merchants. They were moving up market with their Plus product, and now with their composable product, they have a real shot at pursuing the enterprise wallet. Enterprises are, not surprising, a meaningful part of the overall TAM. I mean, we estimate for these guys, for their largest customers, they're pushing at least 2/3 of GMV. So I think for Shopify to continue to grow, they need to continue to capture bigger enterprise wallets. The likes of Reebok, like you mentioned, others in that ecosystem will be critical for them to drive growth. And I think what's important here is they are competing against, what most would characterize as maybe legacy software vendors. One of the ones that we're seeing out there would be the Adobe Magento, Salesforce Commerce Cloud. And against both of those competitors, again, they easily double them in growth rates, demonstrating that there is some market share gains to be had here.
What does Shopify do that other people don't do? I know they have innumerable merchants on their platform. Is it just that experience is giving them an advantage?
Look, I think that they resonate well with merchants because they provide a much more agile platform. They're constantly innovating. I think equally important is that because it was designed initially for smaller, less tech-savvy merchants, the time to stand up a merchant store on their platform is meaningfully faster than some of those large enterprise peers that we typically associate with this particular end market. I think this is becoming even more critical in a day where, again, merchants are trying to pivot quickly. In e-commerce, it's not so much kind of the who is your kind of neighboring competitor. Everyone is competing against Amazon. Amazon's naturally proven to be one of the fastest innovators out there. So I think for a lot of merchants, they recognize that they need a platform equally as fast, equally as nimble, equally capable of scaling with the likes of an Amazon.
That's interesting. So if I'm a merchant, I could go on the Amazon platform, but I guess I'd have to pay money to Amazon to do that.
Yeah, correct. Now, look, at the end of the day, I think merchants will go where consumer eyeballs are. But at the same time, they want to be able to capture as much of that revenue and bring that back in-house as you can. Your own and operated website is always going to be where you generate the greatest amount of profit, right? You also have the greatest amount of control of your own consumers on your own and operated platforms. Shopify enables that. So even if you can capture, a comparable sale on an Amazon, on an eBay, on a TikTok, right, to be able to bring those eyeballs back onto your own storefront, that's what will generate the highest profit for a merchant long term.
Finally, Ken, where would you be a buyer now of Shopify? Would you put fresh money to work?
Yeah, at these levels, while valuation is definitely at a premium, we still think that there's upside. We have a price target of $130. Some of the drivers that'll get us there is, like you mentioned earlier, I think enterprise demand is really starting to pick up. It went from, an interesting talking point to now, a product that we consistently hear is showing up at customer bake-offs. I think they arguably could still win a greater share of those deals, but we see that there's an inflection coming. Again, they are a share gainer in the commerce space. We think that there is still plenty of room to go, both domestically and abroad. And they've proven over the last 2 years that they can grow profitably. Now, keep in mind, this is a business that is growing 20%, delivering 20% free cash flow margin. So, kind of fitting very squarely in that rule of 40 that software investors really like to invest in.